Hello and welcome to another edition of No Nonsense with Pamela Mullen. Well, once again, it is everything almost everywhere all at once. Tariffs. No new tariffs on Canada, President Trump says, because we are protected by NAFTA or the USMCA. But tariffs announced earlier will remain in place, as will our retaliatory measures. And there may later be some new ones imposed. We'll talk about that in a moment. Many believe that Trump has literally blown up the global trading system and may, in the process, have triggered a global recession. Others argue this is more negotiating, the art of the deal, that these reciprocal tariffs on dozens of countries, including China and India, may even be gone by the end of the summer if he gets enough face-saving responses from these other countries. Still, there are dire warnings from political leaders, and there was an immediate nearly $2 trillion wipeout in the market. So all this uncertainty in the midst of an election in our country with no functioning parliament since last December. So to Trevor Tombe now, professor of economics at the University of Calgary. He's also the co-director of Finances of the Nation, a partnership of academics and the Canadian Tax Foundation to make financial data public. Great to see you. How are you doing? Are you reeling or busy looking at those finances?
Well, first, thanks for having me on. It's great to join you again. And reeling is not a bad word to describe how I feel, and I guess how many feel. I mean, the scale of what was announced yesterday is really hard to understate. And there's a lot of important details that are still coming out and some yet even to be determined. But what the president announced on his April 2nd address was an increase in overall tariff rates that varied by country, but on average increases the average tax that the U.S. is levying on imports to about 20%. And we haven't seen levels like that since 1933. And some estimates put it even higher than that because the devil's in the details here, which means that we might have U.S. taxes on imports, tariffs, that are higher than even the highest point during the Great Depression, where tariffs were unusually high even then. And so this is a really fundamental change to the U.S. approach to trade policy.
This is something, and we've noted it before, that he has been maybe one of the few things he's been totally consistent about is his belief in the tariff process. He wants to repatriate the American economy. He wants to reindustrialize and bring companies home and create jobs and is brazen enough about it to say, yeah, prices are going to go up. You might not get the cheap stuff at Walmart, or your car may cost more, but you're going to have a job. So if that's thinking, he's not even going to really respond to the $2 trillion or, what's happening on the markets every hour, or people reacting saying, okay, we're all going to retaliate now.
Yeah, I think that's where the uncertainty lies. What is the underlying motivation for the tariff is quite important to understand maybe how long it may last. If it is truly about getting some negotiating leverage over other countries, then the tariffs will be temporary in nature. But what was interesting in the rates that were announced yesterday is in what determined the tariff rates that the U.S. levied. So it wasn't 20% across the board on everyone to be negotiated. The rates varied. EU, 19% or 20%. Japan, about 24%. And it turns out these tariff rates are exactly equal to half of the U.S. deficit relative to its imports. And so these are tariffs that are completely motivated by trade balances that the U.S. has with other countries. And that's interesting because it is something that the president has pointed to his entire adult life, as far as anyone can tell, as a source of concern.
This will help him pay off the bills. Like this will help. I don't know, but there was this crazy formula of taking the value of the trade and dividing it in half and then going here. This is what it is, right?
And so that suggests that if that's the motivation, these trade balances and the US importing more than it exports, if that's ultimately the motivation, then these might be permanent, or at least permanent in the sense that the president's not going to be removing them anytime soon. And, another potential motivation for this is the revenue. Some early estimates, and this might change because it's just the day after, but it looks like these measures might raise approximately $3.1 trillion over the next 10 years. So that's a considerable amount that may be used to finance tax reductions elsewhere, in which case tariffs would need to be permanent.
Yeah, or paying down debt with cheap things. Sure. And a lot of people today on the state side, I'm listening to all the American analysis too, which is this is just part of his bargaining about the larger deal that he's in the battle, political battle, domestic political battle at home, and his one big bill to deal with those issues. Like it's hard to discern what it is, but it is having this powerful impact. I mean, we are seeing countries really respond. The EU is out. We've responded already with retaliatory moves. I think just before we go on, though, like part of the other issue is that this ends up costing the person, the country that imposes this tariff, a lot of money on the consumer, and that we're going to get hit with tariffs there, and then we're going to impose our own and get hit again.
That's exactly right. So tariffs are taxes on imports. And those taxes are, for the most part, paid by the importer, the buyer. Now, some of the economic cost can be shifted abroad in the form of exporters taking a haircut on the price that they charge, for example. And so that's one way in which, at least in Canada, we might experience some of the costs of tariffs, producers here accepting a lower price, therefore lower revenues and so on. But if the experience that the US has had with its previous trade war in the first Trump administration with China, US consumers are likely to pay the overwhelming majority of the costs. And so far, just to give a sense of scale, this is analysis from Erica York at the US Tax Foundation. Really some great work and surprisingly fast to have it done just within a day. It looks like this will reduce, on average, the after-tax income of Americans by about 2.1%. or about $2,000 per household. And so a considerable cost on Americans in the form of higher prices because of the tariffs.
So that is, they might get a tax break further down, but they will pay more. Is that like, how does
exactly
that
right? Exactly right. And this will vary by household in terms of what you buy, because different people buy different things. And this is going to be something that largely affects the price of imports. But even domestically produced goods that are a substitute for those imports, those producers can now charge more. So tariffs don't just make imports more expensive. They can make goods across the board more expensive.
Which we're even seeing here. I mean, the price of food goes up, things we make domestically here because we import the container from the US or
exactly. And the retaliatory tariffs, and this is an interesting debate I should highlight among some around like what Canada should do. So I want to be clear. It's a pretty unprecedented situation, so I don't know what the best response is, but it is important to remember that our retaliatory tariffs are also taxes paid by Canadians.
Correct.
So far, it looks like the measures that we have rolled out, we've had 2 rounds of retaliation plus what was just announced today, might increase consumer prices on average, I estimate, by about 1%. Now, it's relative to our 2% inflation target, so that's a pretty big change in prices. And where we go from here kind of depends on what's next. And there are other retaliatory measures that have been put forward and are in the works. For example, earlier in March, the government announced potential responses on a wide variety of goods, about $125 billion worth of goods. And that was open for a consultation period. And that consultation period ended yesterday. So we may see what the government's going to do with that package of responses.
And it is just bizarre that we're in the middle of an election and, we have this sort of caretaker. I mean, you could see Mark Carney correcting himself every 5 minutes, talking about, my government doing this. Well, whatever government is elected, we'll meet with, it could not come at a worse time.
Indeed.
But in your community, the economist community, there is really a sharp divide on the impact of retaliation, that's not the way to go. A lot of strong feeling that way.
Yeah. And so I guess it depends on how one views the goal of retaliation. So economically, I think it's beyond question that tariffs would be costs borne by Canadian consumers. And then I think the question is, what's the impact in the United States in terms of the communication strategy of the government and public relations? Does it affect political dynamics in certain states, especially when the responses are targeted to politically salient items in the US? And so that's where, I'm willing to, defer to others with expertise in this area. It might be a cost worth paying, but we shouldn't neglect the fact that our retaliation has an economic cost that further weakens Canada's economy, in addition to the tariffs that the US levies.
Yeah, that's, I guess, when you state that you're going to, cut off electricity, or you're going to stop all imports of anything from a red state, from a Republican state, you're only going to buy, with a Donald Trump like figure, we're kind of asking for trouble. Like as we witness the Mexicans, they've kind of also a partner in NAFTA and USMCA. They've kind of kept their head down, answered some of his, we'll put more people on the border and on questions of defense and crime and all of that. But, and so they've kind of not been really hit in really as in a public way, and not the stuff about the 51st state and all of that.
We're seeing a lot of differences across countries in how they respond. Australia, for example, not retaliating on the steel and aluminum tariffs, whereas we did. And I think we'll see a lot of variation in terms of how other countries respond to what was announced yesterday. And I think that shows that it's not obvious how to best approach the situation. And I do come down somewhat skeptical on the effectiveness of retaliation in Canada, and tend to think our efforts should be directed towards improving Canada's economy, despite U.S. trade policy uncertainty. Yep. But others disagree, and others whom I have a great deal of respect for think that retaliation can be effective. And I think we'll look back on this moment and until the dust settles, we won't really know.
Well, and people are making their own decisions in terms of, whether they're traveling to the US or consuming that. I mean, that is going to have an impact too. And it's something that is not a government standing up and saying, we're going to retaliate and therefore risking retaliation of the retaliation. That's just consumer decisions.
Exactly.
I do really want to get into that question because, of course, it's part of the political debate in this country, too, which is, if we are going to deal with the U.S. and if we are to take the words of Mark Carney seriously, that our relationship has fundamentally changed and forever, then on all sorts of fronts, then we do need to do some things that we probably should have been doing for the last couple of decades. Do you, first, before we get into some of the detail, what's your take on that? Do you think this relationship is fundamentally changed?
I think part of it is fundamentally changed in the sense that whatever happens to tariffs, and indeed whatever happens in, say, the midterm elections or the next presidential elections, the level of uncertainty in the economic relationship is, I think, going to be persistently higher. Think about a company investing several $billion in a large expansion of a facility or a new facility that is tied into U.S. supply chains or geared towards exporting to the United States, as a lot of our manufacturing activity is geared towards. You're going to naturally and prudently maybe think twice about how much confidence you have that that the access we currently enjoy will be there in the future. And we're seeing measures of trade policy uncertainty that are higher now globally than at any point ever recorded. And economic policy uncertainty in Canada in particular rising more over the past several months than any other country for which we have these kind of measures. And that uncertainty will change investment decisions. That will change the nature of trade, the composition of it, the overall size of trade, independent of the tariffs, just because businesses will naturally be hedging some of that risk.
But two things. I mean, one, this is the largest trading relationship in the world. It is hard to imagine how we could or would even want to unwind that all and try and find a replacement. But secondly, I mean, this is a last term president. This is second term. It is almost without fail that in the midterms, the governing party loses clout in one of the houses, right? It just is our reaction proportional to the reality. I mean, it's a president that won't be here in 3.5 years.
It's so independent of government policy or what we choose to do more broadly. I think we will see slightly lower trade volumes going forward than we would have otherwise have seen, just because business investment decisions will be different. Now, I don't. I didn't mean to suggest there's kind of a black or white decision here about trade with the U.S. or not. They're large and they're close, and distance and size are the two most important determining factors for who trades with whom around the world.
I mean, being realistic, this is,
of course, they will be our number one trading partner, full stop, period, by a wide margin. And it's hard to imagine any future state of the world where that differs, even if what's happening now, I think, will, at the margin, mean lower trade in the future than would otherwise be the case. But the efforts to diversify Canada's trading relationship, this goes back decades or more. It's the reason why we have the Trans-Pacific Partnership and the Canada-European Union trade agreement, trying to make it easier to buy and sell with other markets. And that was a prudent policy agenda, but it'll never displace the United States. Now, though, it's a little bit difficult to diversify trade in the sense that we have trade agreements with most other meaningful economies. Our constraints now are largely around infrastructure, rail and port capacity. And it's hard to move the needle there fast, just because even at the best case scenario, takes time to build. And, in Canada, we tend to move even more slowly because of some of the regulatory challenges. But I'll note encouragingly that both the Liberal and Conservative Party during the campaign have put forward ideas to try and accelerate the pace at which we can build. And I'll leave it to others to evaluate whether those will be effective or not. But that's the right direction for us to be thinking about.
Yes, in the olden days, it was called the third option, and Pierre Elliott Trudeau was going to trade with Europe, and he was going to reduce our dependence on the U.S. But reality is what we've just described, that proximity is the most powerful force that exists when it comes to that. But if we actually want to make ourselves less reliant on the U.S., and as you've said, both of the major parties have said we've got to make some moves that way. But then we've got to deal with our own fundamentals as well. And I'm going to come back to the infrastructure thing in a minute. But the debt levels, inflation, affordability, the housing issues, our spending, the long-standing decline we've seen in productivity relative to the United States. A serious decline over the years that has nothing to do with Donald Trump. It was long and trained before him. Decline in foreign direct investment in this country. So those issues are kind of separate a little bit from infrastructure and can we build a better pipeline? Come to that in a moment. But on those other issues, where do we start? What do we do?
That's the question. I think there's a number of places to start on the tax front. And this is where I've been a little I don't want to say disappointed, but maybe surprised that the parties haven't come up with more in terms of tax changes. Both Liberal and Conservatives leaning into, and NDP leaning into
Yeah.
personal income tax changes that will increase disposable incomes for taxpayers, but not changing fundamentally the incentives to invest, either with reforms to business taxation or having a conversation about personal income tax rates at the top, where that affects kind of higher skill, higher pay employees, and where the gap between certain provinces and certain US states is pretty wide, like BC versus Washington. That top personal income tax rate is nearly 20%, which represents a potential drag on our ability to attract and retain certain skilled workers. And so I think having some changes on the tax front would be valuable. Having changes on the regulatory front to ease the burden of new investments in infrastructure or resource projects, very important. And both of these can, in principle, be done pretty quickly. And
but can they? I'm just, we've been having this discussion now about a Bill 69, right? Which, for example, Mr. Carney has said there will be no changes.
That's right.
And business leader after business leader after business leader says that's the block. Like it's just too complicated to invest when you have rules like that.
And when I say we could move quickly, that's not to say we will. I mean, that's a policy choice. And so these kind of regulatory choices we make are a drag on economic growth. Now, in fairness, it might be a drag that achieves non-economic objectives that one puts a lot of weight on. And that's going to be the tough decision for voters to evaluate what parties are putting forward. But no question about it, legislation like Bill C-69 does lower investment and therefore does lower productivity and economic growth. There's no denying that.
I mean, I think it's so interesting when politicians often do this, but you say one thing in Alberta and you say a different thing in Quebec. We've been watching that for years, and it's going on in this campaign too. But we can't even get oil and gas to the eastern part of Canada. Never mind new markets elsewhere. We went through this whole debate in the post the Russian invasion of Ukraine, which is Europe asking for our LNG or our natural gas, and us saying no, there's no case. We can't build it. We can't get it there. I mean, all of our pipelines, even to get the energy to other parts of Canada, run through the US. That makes us very vulnerable.
Yeah, and this will require, in part, a rethink in terms of our approach to infrastructure in Canada. The North-South trading relationship has always dominated East-West, right, from the very beginning of the country, just because it's often cheaper to access markets south of the border than to span the vast geography horizontally in Canada. And even on infrastructure, it might and often is cheaper to run things through the United States. But while economically that might be cheaper, there are risks there. Risks of being exposed to U.S. policy changes, or risks even to kind of sovereignty, in the sense that we might be constrained in our ability to make certain choices if infrastructure is running through the United States. And so having infrastructure wholly within Canada, like the original CP rail, can be more expensive, but it might be a cost worth paying if it provides for more independent flexibility, if you will, in terms of our own policy choices, and dampens the extent to which we're exposed to risks south of the border. And so I think infrastructure, it's not just an economic decision. It's also like a broader national strategic type of policy. And that's requiring a little bit of a rethink right now.
We've seen several, I don't know, I've been involved in a couple of them in the Senate, this call for infrastructure corridors, essentially. Let's get pre-approval for things. I know Mr. Poilievre's put that on the table. And maybe that would have, that's so complicated now with the need to consult and the obligation to consult with communities, with native groups, with indigenous family, not just communities, but entire groups across the country, maybe not even physically located where the corridor is to run. Like, do you see any possibility for that we could, in the face of this, maybe rethink it?
I think so. And we're seeing commitments made publicly, not just by the conservative leader, but also the liberal leader as well, that this is an idea that might have a lot of merit in terms of doing the upfront consultations and environmental reviews and studies and so on once, and then projects within the corridor kind of have automatic pre-approval with respect to all of the issues around the environmental reviews and so on. It's also something where we don't need to think of it as an all or nothing decision. We could move into the space of trying out what a corridor might mean in certain targeted areas. So think about the Ring of Fire in Ontario. This is something that has also come up in the election campaign, and our ability to develop and have mining activity there is an infrastructure question.
Absolutely.
And so it's also related to this idea of a corridor. We could have an infrastructure or transportation corridor to the Ring of Fire and connect that through to an export port, if you will. And so try it out with that, very narrow thing in mind, or between the prairie provinces. So think about Alberta, Saskatchewan, and Manitoba, maybe covering the rail line up to Churchill, for example, and then beyond and further into Saskatchewan and into Alberta, where the need for transport, rail in particular, but also electricity transmission lines are crucial too. Longer term, maybe expanding the amount of hydroelectricity in Manitoba and in order to help facilitate emissions-free sources of electricity in Alberta and
fiber for connectivity and all.
Exactly.
Like you could run anything through the.
And so it doesn't need to,
so to speak.
It doesn't need to be a national corridor immediately. Right. We could step in with targeted corridors to see how effective they might be. So I'm pretty hopeful, and I'm glad to see it part of the campaign.
I'm sure that you heard Mr. Jason Kenney, former Premier of Alberta, say that, when he was talking to people about the Ring of Fire, most of the business leaders looked at that one and estimated a 12 to 14-year regulatory process. And that's why people have been backing away and saying, no, thanks, we'll all be dead.
Yeah. And how a government can credibly signal to investors that it is committed to helping facilitate investment in these type of resource projects, that will be a challenge. Like, even if we adopt some regulatory change, there might be some hesitation on the part of some proponents to invest literally billions of dollars into a project that might experience a change in government, change in regulations at some point into the future. So it'll certainly be easier said than done, but it does appear, at least, that regardless of the election campaign, we'll have a government with a new commitment to try and facilitate that kind of increased investment. And I wish them all the luck.
Yeah, because we may not have a choice, I guess. If as you say, this commitment on the tariff. Just on that, I'm kind of going off on a tangent here, but I was, I've got to say, surprised with the level of tariff imposed on China and on India as well. But because China is such a key player, and because the Americans are so engaged on that, what would you think? What would you anticipate there?
Maybe I misunderstand the question, but
just the response of the Chinese. I mean, we've seen some response from, the EU, from Canada, from this and that, but that's a very big chunk of a very big relationship.
Right. And not a new front in the trade war, if you will. Right. So and in the first Trump administration and sustained, interestingly, through the Biden administration, were large tariffs levied by the US on China and almost all imports from China already. And China did respond with tariffs of its own on roughly the same amount of trade at roughly the same rate. So there is enormous tariffs currently being levied in both directions on China-US trade. And China does, or did, I should say, yesterday vow to respond and counter these tariffs again with tariffs of their own, as has been the norm since the trade war started with them now many years ago. So what changed with China yesterday was that I believe it was tariffs on China of about 34%, if I'm not mistaken.
And I don't have that number in front of me. But it was large.
And that's in addition to tariffs that were already in place. And so China will respond, as it has, with similar measures of its own. And we're seeing trade volumes decline quite a bit between those two countries because of these tariffs.
And what do you think about, I want to come back to things like supply management in this country, but, Donald Trump's commitment to the working people and the base that he's been attracting. And when he said, when a lot of those are the folks that are shopping and looking for the deals at Walmart or, a dollar store because their paychecks have been impacted directly. That really risks that kind of political support too, when just people day-to-day life changes so dramatically. You might not have to buy a new car for a couple of years, but you got to have clothes for the kids because they're going out of them every 3 months, right?
Yeah, and that's an aspect of this that'll be quite interesting to watch. Now, I think this is more than just dollars and cents, though. So tariffs and these trade wars will change prices. That will squeeze households, and it will be quite regressive in that tariffs tend to be the largest burden on lower income families, lower income households, no question. But this is also tied into non-economic issues, especially given the president's rhetoric in recent months around Canada's the 51st state and threats, like fundamentally threats to our economic sovereignty or even the existence of the country itself, means that I think that makes it harder or I should say easier for the government to retaliate. But also harder for the government to change other policies that might be legitimate grievances on the part of the United States, like supply management or other issues. I wanted to go
because those are, everybody's now taken that off the table and said, and this has been a bug in every American administration's.
And other countries like New Zealand and
exactly. Nobody likes that, and we impose some huge tariffs on the importation of American cheese and dairy and all of those things. So our hands aren't clean either. So if that becomes one of those issues, I was surprised we didn't hear about it actually, because Trump raises it almost on every occasion that, I'm coming for supply management. Do you think he will?
Well, he mentioned it in his speech yesterday, singling out Canadian dairy, and he singled out other countries as well. And I do agree with the president on this, that it's a problematic policy that Canada maintains. It is an irritant in our trade relationship with many countries. I mentioned New Zealand, but even the United Kingdom, our discussions around the free trade agreement with them fell apart because we were unwilling to move on this issue. And I understand it's politically challenging for the federal government because there are some important ridings that are strong supporters, let's say.
No politician wants to have that fight with Quebec. Let's just
policy, and so that makes it difficult. And I think it makes it even more difficult now to have concessions of any kind with the U.S. administration, because it will be seen, even among Canadians that might not support supply management otherwise, it might be seen as giving in to, in this case, a bully.
Yeah.
And so I, in the short term, suspect that we will not be seeing any changes to supply
Yeah.
management. And over the long term, to the extent that we have a government that does want to lower grocery costs for Canadians and prioritizes that above a few thousand dairy farmers, many of whom are corporate
Yeah.
farms. So
Exactly.
it's
Yeah.
not the family farm that people might have in mind.
Yeah.
We'll need to reform that system through a choice of our own. I think it'll be very hard to reform that system in the face of U.S. pressure.
Right in this time. I mean, the thing is, over the long term, the margins in the food industry are very, very narrow.
Yeah, 3 or 4% for
Yeah.
grocery.
So, yeah. So that's I mean, it is going to eventually have to be dealt with. Your point is, though, perhaps this is not the moment.
Yeah, I guess we'll see.
Yeah.
If push comes to shove and supply management is really prioritized by the U.S. administration
Yeah.
in our review discussions around the USMCA, it'll be tough for the government to make the choice to abandon the entire free trade agreement. If the U.S.
Yeah.
really wants supply management to be removed or to have tariff-free access for U.S. dairy producers into Canada, and the choice is forced, as in it's that or no agreement at all,
Yeah.
that'd be a really tough call for the government.
Well, and we can't, I don't think, in the face of this, risk that at this point. I mean, how many times has the president declared that this is the worst possible deal that's ever existed in the whole world, even though he negotiated it? That we have to have some rules and regulations with the country we do $1 trillion worth of business with. So
Indeed.
there has to be some rules on some of those other issues of making ourselves more attractive to investors, so that money is coming in from other sources, maybe than American sources, although that will always be a huge part. You've talked about taxes. You've talked about tax levels, tax rates, dealing with the regulatory climate. We've also heard from a lot of people that there's just a different mindset. We have government so involved in so many aspects of our life, and we're seeing it again. We're going to have a new Department of Building Houses and, those kinds of things, that it's kind of the antithesis of what the cold, hard investors looking for. They want to come, they want freedom. They don't want this, another level of government bureaucracy. Whatever it may be imposed, it's already there on the infrastructure side. Are we going to have to kind of change that thinking to just about the role that government plays in all of our lives? And we've seen it most particularly, I think, on the climate issue.
Yeah.
What car you're going to drive, or
I think we're already seeing a shift in that in a couple of senses. So Canada is a very decentralized country. So when we say government, I think we should have in mind governments, and there are lots,
100%.
Lots of them. And what I'm very encouraged by is what seems like a new willingness on the part of provincial governments for them to ease the stringency of their local regulations by deferring to others. We had Tim Houston, for example, Premier of Nova Scotia, putting on the table a really interesting act that I don't believe is passed yet, but it seems like it likely will be. That for any province that reciprocates, Nova Scotia will allow compliance with that other province's rules, regulations, standards, credentials, and so on to be automatically deemed sufficient in terms of compliance with Nova Scotia, even if you're not literally compliant with the Nova Scotia rules. So this kind of just automatic recognition of the validity of the rules and regulations of another province. So it's not deregulation in the sense that the rules are still there, but it's easier for now businesses to operate nationally in Canada if they don't need to simultaneously comply with 10 different sets of rules and regulations from one part of the country to another.
And especially on the financial front. I mean, we have like 10 SECs. Right?
Exactly. And that's not unique to finance. We have local regulations that bind in many areas of economic activity, and that's a burden on our productivity because it makes it harder for businesses to scale. But it does look like provinces are willing to take risky steps to try and improve that, like Tim Houston's done, but also a commitment for broad credentials recognition, which is often framed as a way for Canadians to move more easily from one part of the country to another. But it's not just that. It's also our ability to trade services with each other. Think about a professional service who might have a client in another province. Well, if they're not appropriately registered with the often provincial regulatory body in that other province, they may not be able to actually sell.
Well, even service. The question of healthcare, we are so proud of our national quote unquote healthcare system, but boy, you try and go get healthcare in a province in which you do not live, it's complicated.
Well, interestingly, you can buy healthcare in a province that you don't live in. So we can, there's lots of queue jumping that occurs. Which is kind of like really strange where you can just go to another province and pay for a procedure that you can't get in your...
If you live locally.
If you live locally. And there's doctors too who move as well. And so often you have... So in Alberta, we have some procedures that are done in Vancouver by a doctor that... flies out to Vancouver, rents a facility, conducts over the span of a week a number of procedures for Albertans that also fly to Vancouver. And so it's really quite strange and inefficient. And healthcare is, I guess, a whole other can of worms.
That is a whole other can of worms, but it's true. And I think what Tim Houston is doing is signaling, because we've been talking about these interprovincial trade barriers for as long as I've been alive, and we actually have to do something about it.
And then to your broader question as well around the role of government, we may, as we did in years past, be asking those hard questions as we try and make fiscal space available for other priorities, not just infrastructure, but I think about military expenditures needing to expand. In order to get the fiscal space to handle that, we may need to do a kind of a detailed review of existing government programs, as Paul Martin did, asking hard questions around whether the program is something that the government should or shouldn't do. And put military aside, healthcare, as we just noted, the cost of that will be rising as populations age, and this will be a real challenge for provincial governments. And to make fiscal space available for what is a growing area of public service, it might require some difficult choices on what the government does or doesn't do elsewhere.
And we do have to do something in terms of the North, whether Donald Trump is president or not. We need to do that for our own sovereignty purposes, our own defense purposes, all of those things.
And that won't be cheap. And so we need to...
because we have no base. We're kind of starting from ground zero. I read an article this morning, just when I was looking over some notes before our conversation. The date on this is October 2024. So this is before Donald Trump is elected. And it says, Canada is on the wrong path and fundamental change is needed, especially in our relationship with the U.S. That's the cut line. And then they went on to make all of the points that are there. So the time is now, it seems, Trevor.
I couldn't agree more. And maybe the time was also in the past, but now it's really hard to deny.
Certainly was, yes.
The need to do things differently domestically. And what a stat I like to point to is over the past 10 years, productivity has grown in Canada by about as much as it typically did every year for 20 straight years previously. And so that represents an economic hit to Canada on the order of about $600 billion this year in foregone economic activity. That is far larger than the costs of trade disruptions with the U.S.
and tariffs.
Yeah.
That's an amazing figure. Yeah.
And it's this moment of disruption with the United States that I think has brought right to the top of the policy agenda the importance of having as strong a Canadian economy as possible. And that is not something that we have prioritized. And fair enough, if there are other objectives that past governments have wanted to prioritize. But I think now it's rightly risen right up to the very top of the policy agenda.
Yeah, and if we can just understand we're doing this in our own best interest and get on with it, and put the political fight with him aside. It's always great to talk with you. You're very thoughtful, and then you always have those great numbers that kind of shock us into reality. And sometimes we need those. Trevor, thank you so much.
My pleasure. Thank you.
Yeah, it's great. Trevor Tombe is a professor of economics at the University of Calgary, also the co-director. This whole organization that you've got going is really interesting. The Finances of the Nation, and this is academics working with the Canadian Tax Foundation and really trying to get the data out there so that we can maybe make some smarter decisions. So that's an important thing. Thanks so much for being here. And thank all of you for joining us today for this discussion about our ongoing trade troubles with the United States. We'll see you again very soon.